welcome to the deep dive. You sent us George's Blockchain DXB.mp3 that was recorded April 16th, 2025.
That's right.
And you're looking to cut through the noise on crypto and blockchain.
Yeah, there's always so much going on.
Exactly. So our mission today is basically to pull out the crucial insights from this audio for you, without getting bogged down in every single detail.
Sounds good. This recording, it really gives a fascinating snapshot, doesn't it? We've got market shifts, the impact of, traditional finance stuff like tariffs,
Right.
specific company news, NVIDIA, Mantra, even some exchange disruptions.
Finance and KuCoin were mentioned.
Yeah, those two. Plus regulatory actions, Abu Dhabi specifically, and even some innovation in Web3 insurance. Lots to cover.
Okay, let's unpack this then.
Yeah.
George starts off looking at the global crypto market. Notes it's down a bit.
Just slightly, yeah.
But he pretty quickly moves on to what he sees as maybe bigger news, like this talk around tariffs and government interest in Bitcoin.
All right, let's start with that market picture just to ground ourselves. So April 16th, the global crypto market cap, it dipped about 1.37%.
Okay.
Settled around $2.65 trillion. And interestingly, the 24-hour trading volume, that was down more.
How much more?
7.34%, dropped to about $74.29 billion.
So what's the key thing to pull from that? I mean, George mentioned tariffs, but then he immediately flags the FOMC meeting in May.
Exactly. The Federal Open Market Committee. He points to that as the more immediate thing to watch for market impact.
Right. A reminder that crypto doesn't exist in a bubble. Fed decisions matter.
Precisely. And if we dig a bit deeper into DeFi, decentralized finance, the total value locked TVL was around $9.05 billion. But what's interesting is DeFi activity was only 9.5% of the total 24-hour volume.
Is that low?
Well, George's perspective was that a healthier sign of decentralization would be seeing DXs, decentralized exchanges, hitting maybe 40-60% dominance.
Okay, and who are the top DXs then?
At that time, Uniswap, Radium, Orca, PancakeSwap, and Curve were leading the pack by volume.
Got it. Now, you mentioned something, or rather, George mentioned something potentially concerning about stablecoins.
Yeah, the stablecoin volume, it was sitting at about $69.56 billion.
And why is that concerning? Remind us, stablecoins are used for?
Often used by traders, yeah, like readily available cash to jump into other cryptos. George felt a healthier market might see that volume closer to, say, $120 billion.
So maybe less dry powder sitting on the sidelines right there.
That's the suggestion, yeah. And USDT was still dominant, then USDC, then BUSD.
Okay. And the big two, Bitcoin and Ethereum.
Right. Bitcoin's dominance was strong, 62.92%, Ethereum at 7.34%.
And their stats, volume, market cap.
Bitcoin's 24-hour volume was $28.3 billion, market cap $1.66 trillion. Ethereum had $13.1 billion in volume, market cap around $192 billion.
And then, kind of shifting gears, he talked about meme tokens.
He did, yeah. Acknowledged their revolutionary status, as he put it, still relevant.
Which ones were top?
Dogecoin was still #1, despite a big drop, apparently. Then Shiba Inu, Pepe, that Trump-themed coin.
A Trump coin? Really?
Yeah, ranked 4th. And Bonk was 5th. It really shows how community and, sentiment drive value there, doesn't it?
Absolutely. Separate from fundamentals often.
Sure.
What about actual prices for the main ones?
Okay, Bitcoin was trading around $83,866, down a bit over 24 hours in the week.
Ethereum.
Near $1,599, similar downward trend. But XRP was the interesting one.
How so?
It was up significantly over the past 7 days, even though it dipped slightly in the last 24 hours. A bit of an outlier there.
Okay, now let's circle back to those tariffs. George felt there was some misleading information going around.
Yeah, he seemed to think so. But then he dropped this really significant piece of news about NVIDIA.
The $500 billion investment.
Exactly. Pouring $500 billion into U.S. infrastructure, building offices, and get this, manufacturing supercomputers in the U.S. for the first time.
Wow. And the reason?
Primarily to avoid tariffs. That seems to be the main driver.
And this is confirmed?
Yep. Confirmed by both the White House and NVIDIA officially. It's a huge deal.
What's the potential ripple effect?
Well, potentially very bullish for the U.S. economy. And indirectly, George suggests, it could be good for Bitcoin and crypto too, especially if the media connects the dots between this investment and the tariff policy.
Interesting. He mentioned other figures too, didn't he? About money secured by the administration.
Yeah, he mentioned over $5 trillion already secured through trade measures by the Trump administration and potentially another $2 trillion coming from these tariffs.
So connecting tariffs to Bitcoin directly. How does that work?
Well, this leads into an interview George highlighted, Anthony Pampliano interviewing the White House Digital Asset Director, Bo Hines.
Okay, and the takeaway?
The really big one, the potential idea of using tariff revenue to buy Bitcoin.
Buy Bitcoin as a national reserve.
That's the implication, using it as a strategic reserve for the U.S.
Did they say how much?
According to Hines in that interview, no specific target. The intention stated was to acquire as much as possible.
As much as possible, wow.
And Hines apparently also relayed that President Trump wants the U.S. to be the Bitcoin super wallet of the world.
A super wallet.
That's
Quite the statement. Suggests a real shift in thinking, doesn't it? From just regulating to actively accumulating.
It really does, a potential paradigm shift. The interview also apparently covered stablecoin legislation, something called the Genuis Act.
Genuis Act.
Yeah, aimed at fostering digital asset innovation, apparently. And also the potential for blockchain and banking.
Okay, quite a bit covered there. But not all the news was positive,
That's
right? Let's shift gears to the more concerning stuff. Mantra token. ZOM.
Yeah, that one took a massive hit, dropped 90%, just plummeted.
90%? Why? Just market forces or?
No, this looks like more than that. There are serious allegations flying around. Insider trading, token dumping.
Oh, wow. What's the evidence?
Reports citing Arkham intelligence data, apparently showing significant wallet movements connected to a group called Laser Digital right before the crash, including a big sell-off on the OKX exchange.
Has anyone responded to these allegations?
Yes. Both Mantra's co-founder and Laser Digital have publicly denied any involvement. And OKX, the exchange, flagged the trading as suspicious. So presumably they're investigating.
And Mantra's involved in tokenization, partnered with the Amark group.
That's right. Which adds another layer, raises questions about potential knock-on effects in that space. It's a stark reminder of the risks.
Definitely. And the problems weren't just with individual tokens, right? There were exchange issues, too.
Yeah, several major centralized exchanges, Binance, KuCoin, and other services, too, like Rabby the Portfolio Tracker and BB Bank.
What happened?
They all had issues because of an outage at Amazon Web Services, AWS.
Ah, the backbone of so much of the internet.
Exactly. Reports suggested Binance had to briefly pause withdrawals, and users on both Binance and KuCoin apparently had trouble trading.
It's kind of ironic, isn't it? Web3 platforms pushing decentralization.
But still relying heavily on centralized giants like AWS.
Yeah.
It sparks that whole debate again.
The centralized efficiency versus decentralized resilience.
Precisely. When AWS has a hiccup, it can cause widespread problems, even for supposedly decentralized services. Though usually, centralized providers can fix things relatively quickly, too. It's a trade-off.
Okay, let's move across the globe now. News from Dubai and the Middle East.
Right. First up, a pretty significant regulatory action from Abu Dhabi.
What was that?
The ADGM Financial Services Regulatory Authority slammed the Haven Group with a big fine, $8.85 million.
Ouch. Anything else?
Yeah, they also canceled the license of an entity called ACL Limited and banned its founder, Christopher Linus.
Why such strong action?
Seems like a whole list of serious violations, routing client money through unlicensed firms, inadequate anti-money laundering systems, doing financial stuff without the right licenses.
That's pretty bad.
It gets worse. The investigation apparently found they created over 200 false or misleading documents and lied to the regulators during the investigation.
Wow, that's brazen.
Definitely sends a strong message about enforcement in the region, right? They're serious about compliance, which ultimately is probably good for legitimacy long term.
True. Okay, but there was positive news from the region, too. Something about insurance.
Yes. On a brighter note, Realm Insurance and Leela Insurance got central bank approval in the UAE.
Approval for what?
To offer Web3 insurance solutions. Proper, multi-line insurance products designed specifically for digital asset businesses.
That sounds necessary. What do they call?
Sigma Web3 and Sigma Wara.
And what's the significance of this?
Well, it's established financial institutions recognizing and creating products for the unique risks in Web3. They formed a partnership back in February 2025, focusing on these high-growth sectors, digital assets, biotech, AI.
So who are these products for, specifically?
Sigma Web3 is aimed at companies actually building or using blockchain tech. Sigma Wara is for firms regulated by VARA, Dubai's Virtual Asset Regulatory Authority.
And what risks do they cover? Things like hacks.
Exactly. Financial cybercrime, professional liabilities, the kinds of risks traditional insurers often struggle to understand or underwrite properly in this space, so it fills a critical gap.
Makes a lot of sense. Okay, finally, George tackled a listener question in the audio, didn't he? about U.S. dominance in Bitcoin.
He did, yeah. The question was basically, should the U.S. aim to be the Bitcoin superpower, or should crypto leadership stay decentralized, spread across nations?
It's a fundamental question, really.
Yeah.
Right at the heart of the whole crypto idea.
Absolutely. And George gave a pretty balanced perspective, looking at both sides.
What was the argument for U.S. leadership?
Well, leveraging the U.S.'s existing financial muscle, its global influence, strong legal frameworks, the idea is it could provide a solid institutional foundation for Bitcoin globally.
And maybe encourage others to follow. Like El Salvador, but on a bigger scale.
Potentially. Plus, the historical influence of the U.S. and the current president's seemingly positive stance were mentioned as factors supporting that view.
Okay, but what's the counter-argument? Why shouldn't the U.S. dominate?
It comes back to Bitcoin's core principle, right? Peer-to-peer electronic cash. Decentralized.
So concentrating power in one country goes against that.
Arguably, yes.
Huh.
George emphasized keeping a level playing field for other nations. He mentioned El Salvador, Nigeria, Bangladesh, Singapore as examples, promoting distributed power.
And there's the risk that U.S. policy could change later on.
Exactly. If a future administration isn't so pro-Bitcoin, that could cause instability if the U.S. has become too central. So it's about the risks of centralizing control.
It really highlights that core tension in crypto, doesn't it?
Yeah.
Centralization versus decentralization.
Constantly. It's an ongoing negotiation in this space. And geopolitics are clearly becoming a huge factor in how it all plays out.
So thinking about everything we've just discussed,
Yeah.
the tariffs, NVIDIA, the potential for the U.S. buying Bitcoin, the exchange issues, regulation in the Middle East, the insurance innovation.
Yeah.
It's a lot.
It really is a complex picture right now.
Which leads us to the final thought for you, our listener, to ponder. Considering all these developments, what do you think is the most likely future path for Bitcoin? Where is its global influence and governance actually heading?
Yeah, that's a big question to mull over as we wrap up this deep dive.
Thank you for sharing George's insights with us. We really hope this deep dive has given you that distilled, insightful look at these complex topics.
Hope it was helpful.
Definitely take some time with that final question. Maybe look deeper into anything that caught your interest, and we look forward to the next deep dive with you.